Hi, I'm Stacey Hyde, and I'm back for another episode of Better Financial Health in 15 minutes or less. And today I'd like to talk about sort of a special area of taxes called estimated taxes. A lot of people never have to worry about estimated taxes because all their income comes from a salary and an employer is holding out taxes, or they're on Social Security and they're having Social Security hold out taxes. But if that's not you, maybe you are an employee, but you receive stock options, or you have a side hustle where you make money. In those cases, you may need to make estimated tax payments. And what that means is that each quarter you need to figure out how much approximately you think you'll owe in taxes and go ahead and send that in. And the reason you want to do this is if you don't pay in, depending on your income, either 100% or 110% of your prior year's tax liability, you can be subject to penalties and interest on your taxes. Used to be, when interest rates were next to nothing, that interest really was not a big deal. But now that interest rates are in the 5-6% range, that interest can add up quickly and can lead you to have to pay in more to the IRS than you even wanted to. So if you have received restricted stock units from an employer, those turned into stock, and then you sold them, it may be worth running it through if you do your taxes yourself, TurboTax, H&R Block, or if you have an accountant, just asking the question, hey, do I need to be making estimated tax payments? The other way you can do that is look to see what you paid last year and see what your safe harbor amount is, and make sure you've at least paid in that amount. I've had clients where they had investment portfolios, but their earned income was relatively modest, and they wound up owing penalties and interest because their employer, because of their income was quite low, looking at you teachers, and so their employer was not holding out much in the way of taxes, because the assumption by the employer is that's your only income. In fact, they had significant other income from IRA withdrawals, from an inherited IRA, some stock sales and that sort of thing, and that pushed up their tax liability. So it's important to pay attention to that, and if you're self-employed, that you're also putting aside your Medicare taxes, the 7.65% for Social Security and Medicare that you pay, and then if you're employed by someone else, your employer's paying. But if you as a self-employed person, you're actually going to have to pay that whole 15.3% as part of your taxes. So you've got that, and then you've also got your regular income tax, and you want to make sure you're paying that in throughout the year on a quarterly basis. So that's something to keep in mind. It's a little bit of a special situation, doesn't apply to everyone, but I know people oftentimes get really sort of like, oh, whoa, I didn't realize I was supposed to be doing this. So just wanted to give you a heads up as we go into the final stages of tax filing season for 2023, and we look forward to 2024. So if your CPA or your tax software prints out some 1040 ES, that's estimated tax payments, then you'll know that that's what they're recommending that you do, and it's important to send those in or sign up to have them directly debited from your bank account each quarter. Thanks again for tuning in. This has been another episode of Better Financial Health in 15 minutes or less.